are live. Live in the new Restream.
The stream is streaming.
We've ditched Zoom. I actually think it's a lot better. I did a solo AMA last week using Restream. I hear an echo. I used Restream instead of Zoom, and honestly, it worked a lot better. And then also the quality is significantly improved for the recordings. So
nice.
So we'll keep using it. I think you're muted in the space.
I was.
All right.
I should not be now. Let me get to the Threadcast. Cross-chain reality and new open source releases.
Yep.
Boom. I don't know who Anderson Ho is even referring to with that question. I'm not familiar with that account.
Not these Discord announcements. All right. Well, while I do the announcements, you want to talk a little bit about the markets? I know Bitcoin just hit 85 again, so that's.
I mean, I don't know.
Not too bad.
Yeah, it's. I don't know what there is to talk about. I mean, it's kind of just. I don't really have a conviction that's outweighing one or the other in terms of direction, or maybe I'm just hoping for a little more downward action to allocate. I mean, to accumulate some more. But yeah, getting a nice pump today. Obviously, stock market, is rebounded as well. So we have new monthly candle. So that's one thing I've been paying attention to in terms of the pullback, because from a charting perspective, the last move we had back in February of 24, after we went sideways for a while and kept testing the 10-period moving average and went through it a few times, but every month closed above it. So and then rallied, which gave us our last rally when we went up, October, November, into December, and then now same thing, monthly chart. We tested the 10-period in February, poked through it in March, but closed above it, and then so far in April, we're above it and green. I wouldn't be surprised if we poke through it again. I'm kind of hoping we do. I'm kind of almost betting on it in terms of buying more. So if that's the case, we would revisit the 70s again, whether it's just 77 or maybe given that scare and spiking down to 72, which is what I'm really looking for. But as long as we close the month of April above, I mean, right now that moving average is up to 80K. So that's probably the number. But yeah, I feel like that's just been a very good gauge for overbought, oversold, and like bullish, bearish. So like, anytime you're maintaining above the 10-period moving average, you're generally still overall bullish price action. So that is my technical view. So everything on the monthly still looks pretty solid from a technical aspect. And, I guess I'm just particularly being greedy, hoping I can buy more in the 70s. I did dollar cost average into a little the other day at 84. So it's nice to see that that's up. Although I threw it into a liquidity pool, so it's slowly being sold as we go up. But that's my just technical view of Bitcoin right now.
Yeah, I obviously have a much less technical view of things. I tend to just, look at the long term and fundamentals of everything. Obviously, I think there's a lot of things happening in the global, economic arena that is really what's driving the price action And that's been my opinion throughout all this, is that I think it's just driven by kind of the macro events that are happening. So, I think a lot of this tariff stuff is going to be short lived, in my opinion. Um, that's just my opinion, though. But I think it'll be short lived, and we'll see kind of a V-shaped recovery out of this correction. Because what I think is happening is just obviously like ripping the Band-Aid off now, and that's what the administration is doing. And then from here, just easing up on the tariffs and opening up trade, and just making sure that the American economy is secure and growing, I think is what the administration is trying to do. And I think it's like a pendulum, and it's going to overcorrect, and then it's going to come back somewhere more towards a kind of baseline. So in the meantime, obviously there's just a ton of volatility, whether you're in stocks or crypto, it's all just super volatile. So what I'm doing is just kind of holding on, obviously, and just slowly dollar cost averaging, as I think, has proven to be a good strategy. No matter what market you're in, it just always seems to work. So yeah, that's all I'm doing. I've been dollar cost averaging into a few things, but I've actually been buying some Tesla stock. It's been a long time since I bought any. Obviously, went all the way up to like 490, I think. And my average buy from, I don't remember, a year or two ago, was like 176. So
Nice.
I was sitting pretty for a long time. And then, now that we're down around 250, 260, I am a buyer again. That's what I've been doing in the stock market, at least.
Nice.
Yeah.
Nice pop,
I mean,
pop already. It's 275, 276 already today.
Oh, nice. I didn't see that. Yeah, I saw my last buy filled at like 266 this morning. So
yeah, I mean, obviously, my buddy Mike is always buying Tesla on the dip, so I've had that, put on my radar. And it's funny. I was gonna I bought the SPYs instead for like a trade back when we were dumping, and I was like a little early. I ended up taking a small loss because it was an option, so limited time. But when I was doing it, I literally said, I happened to be talking to Mike, and I said, I'm like, I should just buy Tesla instead. Like, I was playing basically just a bounce, off the sell off, and yeah, that would have been the move. Tesla opened like up 30 points the next day or whatever, and the S&P barely did anything.
Yeah, I mean, it all goes back to the having an asset that you have a long-term conviction in, and then buying over a long period of time and holding over a long period of time. And the famous Warren Buffett quote of, it's not timing the market, it's time in the market. So, when I've really looked at my history as, as an investor in a lot of different industries and things, that's always been the number one source of profit is just finding something that is really a high quality asset, something that you believe in, for 10, 15, 20 plus years, in terms of the vision of that asset. Obviously for me, that's been, Tesla for a very long time, Bitcoin in the early days and still today, Ethereum, Rune, Leo, a lot of things that I think have like a 10-year plus horizon of doing things and like actually innovating along a roadmap. Just slowly accumulating those things and holding them for a really long time and being prepared. I think the real thing is like, are you prepared to hold it for 10 years or more? And if you can say yes to that, then I think you might be looking at the right thing. And then your buying strategy should just be consistent.
And the sooner you get started, the better, because it goes back to that time in the market. Inflation is your friend, and the difference between acquiring assets at 21 years old versus 31 years old even is ginormous. And I say that from experience because, in my 20s, I was too busy trying to be a day trader, and I was better off just holding the stocks that I was day trading for that time period. I didn't start really accumulating assets until my 30s. So, yeah.
Yeah, and I see Sheeb said, I don't have the funds to buy stocks. I'm fully in the crypto world. And one thing I would say to that is the stock market's changed a lot over the years. Really, over the last like 15 years, it's changed dramatically in favor of the small retail investor. Before, and this is only a few years ago, you had to buy full stocks. You couldn't buy fractional shares. That's been like kind of a newer thing. Like I think Robinhood kind of pioneered that. And then now pretty much every brokerage allows you to buy, fractional stocks. Uh, but prior to that, you always had to buy in full shares. So like if you wanted to go buy Tesla, you had to buy, $276 worth of Tesla because you had to buy one full share. Nowadays, you could literally invest $1 into Tesla or any other stock that you want to invest in. So, one thing I've told a lot of people is, especially people who say that they don't have the money to invest, is like you have the money to go buy, a coffee or go out to lunch. So you can afford to put at least $1, let's say $1 a week into whatever stock you want to invest in. And you can automate all of this stuff. So, my advice, and this has been my advice for crypto and Bitcoin as well, to a lot of people who have done really well over the last like 8 to 10 years I've been talking about it. But, take like $1 a week, or whatever amount you can afford. I would say $1 a week would be like my minimum, because I mean, $52 a year, I think if you're listening to this, you have an internet connection and some sort of tablet or phone or computer, you can probably afford $52 a year. And set up an automatic buy for whatever you want to own in the long run for $1 a week, and just let that run automatically. It's just it's an expense that you pay and don't think about it. Just let it run in the background. Check in every once in a while, make sure that it's still going and buying, and sitting in your account. Don't touch it. Consider it like a one-way street, for your retirement, and just like literally let it ride for a really long period of time. And everything I've done that with, I've done incredibly well on. I mean, it's literally never not worked. And I think that the reason for that is obviously, one, you need to pick the right thing to be buying. So you need to pick the right asset. And the way you do that is, like I said, and I really like this one quote. I think it was Paul Tudor Jones. I could be wrong. Who said invest and then investigate. So, find something that you like and may know a decent, a fair bit about, but then, once you start buying this like $1 a week, you'll be a lot more interested in investigating it further. And don't be afraid to like say, okay, well, I was wrong and I want to walk away from it. But don't do that based on like price action. Just like, as you actually fundamentally understand it, if you change your mind, then you change your mind, find something else. But find something that you're willing to hold for 10 years or more. So like if you believe that in 10 years, Tesla will be more valuable, then maybe that's Tesla for you. Or maybe it's just the S&P. Maybe you don't want to pick anything. You just want to own the market. So then you do the S&P. Or maybe it's Bitcoin and you just say, okay, well, Bitcoin 10 years from now will be worth more than $85,000. So set up an automatic buy every week and just like let that run in the background. Don't think about it. And then, maybe a few years from now, you come back to it and you say, okay, Bitcoin's 300K. I'm going to dollar cost average out of everything I've bought over the last couple of years, or, whether that's Tesla or anything else. I think it's just the ultimate strategy, especially for the, average retail investor. And like I said, it's something I've been looking at the way I invest, with a close lens over the past couple of months, just because I've been reevaluating the way I trade and do certain things. And one thing I've just kind of come to the conclusion on is that I'd say 90% or more of all the money I've made in investing has been from doing exactly what I just described. It's been the number one way I've profited as an investor. And I've been doing that since I was like 14. So, it started and then Bitcoin and then Ethereum and Rune and other things, just taking that really long-minded approach.
Super early start.
Yeah.
I don't even know. I don't even know what. I mean, crypto obviously didn't exist when I was 14. It didn't exist when I was 18. I don't even know what a stock was until I was 18 years old, and then I got kind of hooked into the market in college. And right towards the tail end of the internet bubble. So I had the joy of jumping into a stock and watching it double in a year and then watching it be worth like a quarter of the value when the bubble burst. So that was my intro into holding stocks. So it was funny timing, but yeah. And to go back to the question, I mean, it doesn't matter if you don't have money for stocks, like, and you're all in on crypto. That's fine. So just do that with crypto.
Right.
It's,
Right.
because at the end of the day, even if you have a handful of coins and most of them don't work out, as long as one of them does. So, i.e., Bitcoin, then over the long run, you're going to be fine. And that's something too, right? When you speak about buying, holding, and dollar cost average, there's basically been no time with Bitcoin where if you bought it and then literally did not look at it again for 3 years, where you looked and were in bad shape. It's like, even if you bought the top, if you bought a top and then didn't look for 3 years, generally you were still in good shape.
Yeah.
So, and that's if you bought at the worst point. So if you're dollar cost averaging, it's impossible to buy at the worst point because you're, continually buying. So even if you started as your first buy was at the top, your dollar cost averaging on that whole, move down until the next bull market. So yeah, I don't think it's not so much about being in, real estate, crypto, stocks, whatever. There's so many different asset classes. I think it's just about doing it with something.
Right.
So, and that's fine to be
pick
all
something
in on
you're
crypto.
interested in.
Yeah. I mean, listen, I know real estate guys that's it. Live and die real estate. They don't mess with stocks. They don't mess with crypto, and they've done well. And then I know, people that are all stocks, and I know people that are all crypto. And I personally like to diversify a bit, but to each their own. And also, there's a time and a place, right? That's like that. The quote. Calculated bets are for making money, and diversification is for keeping money. So early on, you might be better off, just riding or dying one asset class or even one asset, because you need more of a concentration, to really get the outsized gains by the move of that asset. Of course, now you're relying on that one asset, to be right on, but you could do that with, I guess, an asset class if you want to kind of spread it out, but still be concentrated. And many people did that with crypto. And there's plenty of people that, are worth millions of dollars because in 2016, 17, 18, whatever it was, they were all in on crypto and they just kept buying. So.
Yeah. Yeah, it's about the long term, really. I mean, the way people get in trouble is when they start looking too short term. The more you can zoom out, the better you're going to do. And I think that's just applied. Really.
Yep.
Obviously, you could pick something that's not like you could have picked Kodak stock and obviously not done well, but that's that's on you for not picking the right asset. So even if it's and I like what you said about the diversification thing, because it's. I think too many people get too caught up in diversification, especially when you're starting out and you've got a small amount of money. Like even what I'm talking about here with like $1, a week. Do you really want to diversify if you have $1 a week to invest? Probably not. I mean, you'd be better off. Yeah. Even Warren Buffett has a quote. Rather than have, many eggs in a basket, I'd rather have one egg and watch it closely. Right.
Yeah.
So, I don't think you necessarily need to own 10 different things. I think that's a huge mistake. I know I made that when I got into crypto. And, obviously when I first got into crypto, it was just Bitcoin. Then it became Bitcoin and Ethereum. And then all the other ERC-20s came out. And then suddenly I remember I had a portfolio of like 30 different cryptos. And I was like tracking all these different cryptos, trying to figure out, how to manage my money and treating it more like the stock market. And I did do pretty well just because the whole industry grew. But over time I lost on certain ones and then gained more on others. And I realized, it's better to just have a small portfolio that you can look at very closely, understand everything very deeply. Make a spreadsheet. Yeah. I remember when Neil used to say that a lot when we were on the podcast, like a couple good quotes from Neil. And that was one of them. And then another one was, it needs to be enough size to matter. I forgot exactly what the words he used, but
Yeah, which goes back to the concentrated bets thing. I mean, listen, I
Exactly.
remember when he said that the first time, and I was like, bro, I wish I would have heard that 10 years sooner. Because I mean, I can't even tell you how many times I've been right on stuff, and percentage return was sick, but like the actual dollar value didn't, change anything because I didn't have enough size because I was always very good at diversifying. I've been always better at protecting money than growing it. I can grow it, but it's more of a slow grind. And yeah, Bitcoin is one of many examples of me being very, very right, but just not having enough size. So, and I just responded to a comment in the Threadcast where they were kind of saying that that who is it? Monkmaster's gotten to Bitcoin very early, but didn't DCA, and had he, it'd be financially free. And I'm just looking, and I was like, yeah, it's like 100% same thing. Like I got into Bitcoin early, and then I didn't buy anymore. Like I literally bought Bitcoin and then never bought any more Bitcoin for another like 3 years or something. And obviously things would have worked out a lot better had I just DCA'd.
Yeah, it's always done very well for me. Like I said, I really think I'm going to start putting out more content about that, just as a reminder, not only to everybody else, but also myself, that that's been the number one way I've been successful is dollar cost averaging and then just literally waiting it out and just timing the market. Um, and speaking of which, I posted a chart of Rune, and after we talk about Rune and Cacao, we can get into some of the Leo stuff because we've only got about 25 minutes left. But
Freaking Rune.
yeah, I just posted the Rune chart because it's honestly it's crazy to see. Like, I wanted to get your technical opinion on that too. But Rune has really bottomed out at like this $1, to 130 range. And I know we've been talking about dollar cost averaging, and Rune is something I've been dollar cost averaging into. Obviously, I still have a long term belief in Thorchain, but right now I think we have a risk in the Thorchain ecosystem that we've never had before, which is, will Thorchain still be around 10 years from now? And like I said, you got to look at these things, especially, my strategy is, am I willing to hold this for 10 years? And one question I've been asking myself lately about Rune, which is one of the biggest holdings I have, is will I be holding this for 10 years? Because, the protocol's had a lot of issues, and we don't need to get into everything, but, the protocol's had some issues, and now I'm, not now, but over the past, say, 2-3 months, I've been questioning, how will Thorchain do? Will it survive? Obviously, I think it will survive. That's why I haven't sold any Rune, but I've been, accumulating more. So that's my belief in it. But the price action obviously has been very, dramatically not good. Really, we came down from $7 and just crashed very hard. It was basically a death spiral without the death. It didn't die in the end, at least not yet. Hopefully it doesn't die. It's been tough, but Thorchain, in terms of the Nine Realms team and the developments going on behind the scenes, that stuff has not stopped. So, I've been paying very close attention, to the GitHub and the X activity and the activity of the developers, and if they've been delivering on the roadmap. And those are the things that I tend to like to focus on outside of price action. And then, as I just continue to reconvict myself every day that it's not going to disappear, I keep dollar cost averaging. But yeah, this chart, obviously, like in hindsight, this is either going to be a genius moment for getting into Rune, or it's going to be, how did I not see that it was dying? So what's your opinion, Mitch?
I mean, I got to the point where, I just have my long-term spot bag that I've had for years now. And, my goal, I'm not even lie, like I had a price point, I was selling it, and it wasn't even to break the all-time high. Like it didn't even need to get back to the all-time highs. Like and it got so close too. I was basically aiming for like 12.75, like $13. And if it got back up there again, I was probably actually going to cash out just because, my goal is to kind of whittle down the number of coins I have, and then, actually, book some gains. And, obviously, whatever. we saw it cascade lower with all the drama with the lending protocol and whatnot. Like you said, it's going to be a long-term turnaround. So I'm at the point where I stopped looking at it like a month ago because, in my opinion, it's going to take years, I think, to recover from that sell-off and all the issues. So like you said, will it be around? Will it survive? If it does, it doesn't change the fact that it's still going to take years, I think, for the coin to really rally. I mean, I'd be surprised if we saw it back up at, $7-8 in the near future. But again, anything can happen. But yeah, my opinion is at the price point it's at now, what do you have to lose? Like, I know you have much more size than I do, but like I look at the dollar value of it for me, and I'm like, there's no point. Like, it'd be dumb to sell here. Like it makes more sense for me to just hold on to it and see if it does, have a big turnaround story and the coin ends up rallying, and then at that point, maybe I cash out. But I mean, the price it's at right now is definitely like a big support area. I mean, it's been down there before, obviously, as far down as 80 cents, but this whole dollar to like $1.50 area is definitely has a lot of price history, and it seems like it's found a floor here. But
yeah, and it's found a floor. I think an indicator of that is that the rest of the market kept going down, but Rune didn't. Like it kind of went down to like that dollar mark, bounced up a little bit, and then when the rest of the market started going down, it just wouldn't go down anymore, which to me was an indicator of the bottom. I don't know if that is an indicator to you at all.
I mean, it's always, relative strength, so to speak. But, I'm looking at some of the comments in here, and, for anyone that doesn't have any Rune yet, I mean, like your risk reward profile right now, it's totally worth it. I mean, you're risking $1, like even if it's go to zero, you're risking $1.20 to potentially make, 4, 5, 6, 7x your money. Hell, potentially almost 20x if it ever gets, back to all-time highs. So just from a sheer risk reward ratio for someone that's not in, doesn't own any Rune, is interested in owning it, I think now makes sense. Just because, your upside is so much bigger than your downside. And that's one big thing, like all the famous investors are known for, like they don't invest in anything that doesn't have at least like 4-to-1, reward to risk. So on this, you're getting offered that at a minimum, so that's also another way to look at it, for people that aren't in. And I guess I could do the same thing with fresh capital. I know, like you said, you've been dollar cost averaging. So, I'm good. I have finite capital, and it's targeted for Bitcoin and I guess still real estate to an extent. So, but I'm just bag. I'm bag holding all my alts. I'm just waiting for the next alt market. But yeah, as far as Rune goes, like you said, will it survive? And if it does, what will the price look like? I mean, if it survives, I assume at some point, there'll be some price recovery. But who knows?
Yeah, I mean, it's kind of one of those, like you said, asymmetric bets where like if it survives, you're going to do really well. Obviously, if it
That's
doesn't,
the word I was looking for.
Yes. What your downside is. It goes from $1 to zero. So, I guess we'll just see. I've seen Rune go through moments like this before. Obviously, there was during the multi-chain chaos net, there was the hack of the protocol. There were actually, I think, 2 or 3 hacks in a row. And most people thought Rune was going to die. And I didn't, and I kept buying, and turned out to be one of the best investments I ever made, in my career. I see a similar moment happening right now where, like I said, I'm paying very close attention. I'm dollar cost averaging, and I'm not unwilling to change my mind. So, if I see something that changes my mind about the future of Thorchain, then I'm not afraid to, to back off. And, I still think that asymmetric upside exists to the degree that I probably wouldn't sell what I have now. I probably would just let it ride, but I would stop buying more. So it just, we'll see what happens. But I think the asymmetric upside is there, as it always kind of has been. And, if the protocol succeeds, it's just going to be worth dramatically more than it is now. Ahmad Manga said that your strategy with Rune is my strategy with Leo. The question is, do you believe in them to the same degree I believe in you? I'm not sure how much you believe in me. I believe in Thorchain very heavily, though. And like I said, I'm pretty intimately familiar with, a lot of people that work within the Thorchain ecosystem, the community itself and what's going on behind the scenes in terms of development. So I'm very confident in Thorchain and Rune. I also Kakao chart there because I think Kakao is an insanely good bet right now.
I know
the market cap is $18 million, and the protocol. I think I saw the protocol has 15 million in TVL. I got to double check that. But $15 million in TVL. The protocol, the Kakao token is only worth $18 million, and the trading volume is dramatically more than that. So, and by the way, the team continues to ship new tech constantly.
Maybe I'll jump on a Leo Dex today and flip some Hive into Kakao.
Yeah, I've actually updated my strategy a little bit. I still own primarily Rune, but I have started to make Kakao a part of the strategy. I do see them as being relatively tied to each other in terms of at least short-term price action. Because the deepest pool for Kakao is the Kakao Rune pool. And I think most people just generally think of Maya's success as contingent on Thorchain's success, which is not true. But, I think that exists in the market and you can't ignore it. So at least in the short term, I think they're pretty closely tied. But I think in the long term, it's definitely possible Kakao outperforms just because it's so small. Like Rune at the current price is a $400 million market cap, and Kakao is $18 million. So
yeah, no, that's exactly why I was considering getting some exposure to it. And that's funny because that's the same reason like Leo against Hive. Like yesterday, the day before, I swapped a chunk of Hive into Leo because I was just looking and I'm like, all right, well, what's more likely to 4x in price? And it's like, all right, well, that would have to put Hive up at $1, and that would only put Leo at like 4.5, 5 cents. I'm like, well, I mean, Leo's been at 4.5, 5 cents 8 million times. When's the last time that Hive was at $1? So I decided to flip some more Hive into Leo over the weekend. And I'll probably end up doing some more because, Hive, Leo at under 2 cents versus, Hive at 25, 30 cents. Again, it's just that ratio, which one's, going to potentially give me a better return in the near term. And I just see it way easier for Leo to, 3x even than for Hive. Hive would have to go near, its all-time highs, or I'm sorry, near its recent highs, and then some. Where, like I said, Leo would, not even be anywhere near high prices. So I think path of least resistance, right?
Yeah. I mean, I think a lot, and obviously not financial advice, but I think a lot of the ideas we've talked about around dollar cost averaging can apply to something like Leo in a big way. So if you think that the team is going to be building 10 years from now and think that, we've been building for 6 already. So if you just think that I'm, not going anywhere and that the Leo team's not going anywhere and, that the technologies we're building have a path to becoming, more and more utilized over the next 10 years, then dollar cost averaging into something like Leo, the same ideals and mindset applies that we've talked about with, Tesla and Rune and Bitcoin. dollar cost averaging into something like Leo may not be a bad idea if you think that's true. I personally think that's true. So you can see what I'm doing. I'm obviously pretty open about it. But yeah, I mean, you got to do your own research and be aware of all the risks, obviously. But again, it's like that mindset of like, okay, if I can get $1 a week, dollar cost average into something, and build up my stake in it, and I believe in it for 10 years, then you obviously can do pretty well. I think we all have a really unique opportunity on Hive where we all can engage with each other and be active on threads and in each other's blog posts as well. And you can easily make 1 HBD a week or more, maybe even 1 HBD a day or more than that. And then you can take that and you can dollar cost average into Leo with it. And it's kind of like a time investment. And this has been like the story for this blockchain for a long time, but it's like the time investment thesis versus the money investment. I know a lot of people are going to say they don't have the money to invest. And, I would say you're here right now. You have the time to invest, a little bit of time each day into being active on threads and being active with each other. And if all of us adopt the same strategy of can we make, 1 HBD a day or more, and then dollar cost average into Leo with it, we create a whole community around doing that. And I think we can do really well with that as a collective community. So, I think it's a really powerful strategy to do individually and also a powerful strategy to do as a community. And I would love to see more, kind of community involvement in maybe someone comes up with some kind of initiative around that, like the 1 HBD a day strategy or something, where, you get active on threads, you get active on the platform, you work with each other, you upvote each other, you engage with each other, you upvote each other so that each person earns, 1 HBD a day. And then, you guys collectively buy Leo with that 1 HBD a day. And over time, possibly does really well. And, we just keep building this ecosystem and all the different technologies that we're working on. So the episode has turned very largely into investment, which I don't mind. I think it's great. And I think we probably got a lot of good clips, to put out.
Yeah.
So,
what's the Leo updates that we need to cover them because we got about 8 minutes left.
Yeah. I mean, we can do a speed run. Hey, Salome came just in time for the Leo updates.
There you go.
So I actually put a few things in the Threadcast earlier, but I'll relink them. So one big announcement this past week has been the Rango protocol tweeted out that they tweeted out about the partnership with LeoDex. So I'll get into the LeoDex V3 stuff, but they tweeted. I just shared it in the Threadcast. They tweeted out about the partnership with LeoDex and that we are working together, and LeoDex is integrating Rango. So we are becoming, one of the hopefully top interfaces for Rango in addition to, Maya, Thorchain, and Chainflip as well. So that announcement has been awesome to see. And then a bunch of media outlets have started to pick it up. So it's great to see, more and more really interaction, engagement, and attention around LeoDex. So I think that's all generally a good thing. So I'm very happy with how that's going, and you're going to see that roll out across with all these different protocols. A lot of different LeoDex news and collaborations with these different protocols and different teams within these communities. So the LeoDex V3 update was also posted on X, and I'll share it in the Threadcast right now. So this update brings actually a lot of stuff. We've been working on it for months. So we're adding Thorchain, we're adding Chainflip, we're adding Rango, and we obviously already have Maya protocol. So that covers all 4 of the major cross-chain protocols in terms of swapping. And LeoDex obviously is an interface for cross-chain swaps. And right now we only support Maya, but we are in this update, we'll have the other 3 big ones. So like I said, the Rango X post is one example of how, us collaborating with these other teams can lead to a lot of good attention, not just for LeoDex, but for our whole, in Leo and Leo economy. So that obviously has been picked up by a lot of outlets, but also a lot of our X posts on the LeoDex account are starting to get picked up by Thorchain and Chainflip as well. So the one I just shared with all the different LeoDex V3 updates was retweeted by the Thorchain main account. So obviously that gets us a lot of views and a lot of attention on LeoDex, which is all a good thing. We're also adding a lot of major wallets. So like I said, collaborating with the 4 protocols is a big way that we can get more attention. Collaborating with the different wallets is also a really big way to get more attention. So, we're adding Coinbase wallet, Kepler wallet, Phantom Ledger, Trezor, and basically a dozen other major wallet options. And not only does that allow us to then, target this customer base of people that use all these different wallets, but it also allows us to collaborate with all these different wallet providers. So, potentially down the road, doing collaborations with Coinbase, Ledger, and other ecosystems. And really, you can kind of see how this long-term vision of collaboration is shaping up. And LeoDex is like kind of a critical path for all of that stuff is not only when you want to collaborate with these other ecosystems, like we obviously have InLeo, but that's living in a bubble. With LeoDex, we have the ability to collaborate with everybody and bring them features and functionalities that are relevant to them instantaneously, because everybody in crypto needs to swap crypto and do things with crypto. And LeoDex obviously has all that functionality as an interface to all these different protocols. I see Monkmaster said VultiSig soon. Yeah, VultiSig is also included in this update, and I have been talking to their team as well. So another great collaborator, and the ability for us to continue to build out our economy and our ecosystem and connections and networking is with people like VultiSig and others. So you're just going to see a lot of collaborations. You already see it with Rango and Thorchain, and the Chainflip team I talk to, on a pretty much daily basis as well. So, we're talking with all these different teams, and we're shipping out this V3 update, which is the biggest update we've ever done for LeoDex. Obviously, it literally adds routing for all the major cross-chain protocols, and we've side by side quoted swaps with LeoDex and other cross-chain interfaces, and LeoDex is cheaper than all those other interfaces. And it's not just because our affiliate fee is cheaper. For some reason that we still haven't figured out, when these other protocols are quoting your routes, they're somehow getting you a worse price than what LeoDex can get you. So, even if you just make the affiliate fee agnostic, LeoDex is somehow getting you a better, more efficient price. So I think we can have a really big selling point around more efficient pricing, a better user experience, a better UI, more features, more wallet options that actually work, and then just collaborating with all these different ecosystems to get the word out there. And I think that's how we grow LeoDex. And I think LeoDex becomes the kind of core pillar of how we grow the Leo economy in general. So I've been putting out a lot of threads over the past week talking about how the Leo economy is going to transition to being very heavily focused on LeoDex. And we're seeing a lot of success with LeoDex. So we need to continue building that up. So yeah, LeoDex V3, hopefully in open beta by the end of this week. That's what we're pushing for. And then in terms of one other thing about cross-chain, I put out this thread and I see, Morty and some others in the audience. I'm looking for, I made a podcast cover for, for the Chain Chatter to come back, and Chain Chatter is every Wednesday at noon Eastern. I'm kind of rebranding Chain Chatter to be, fully focused on cross-chain. So, we're going to have guests, and we're just generally going to talk about only cross-chain stuff, like Thorchain, Maya, Rango, Chainflip, and everything related to cross-chain. That's going to be every Wednesday at noon Eastern. We are doing it tomorrow, so you can set your reminders. I'll be putting out announcements about it. But if you want to submit a podcast cover, I need to pick one by the end of tonight. So nobody has submitted any yet. Like I said, I already made an example, so you can really take the example I made and just make it better. And if I end up using the one that you submit, I'm giving away 500 Leo to whoever made it. So feel free to submit one. If nobody submits one, I'm just going to use the one I made.
I can hear Morty's ears ringing.
Yeah. Yeah, more tea. This was made for you. So I do need a good cover for that, and then we'll be doing the chain chatters every Wednesday, specifically about cross chain stuff. So again, another pillar in marketing and growing Leodex is bringing cross chain or bringing chain chatter back and making it fully focused on cross chain. Yeah, the Hive Tuber. I'll see you tomorrow for chain chatter. So that is another big announcement. And then one other thing I've been thinking about, and this again ties into Leodex, is there's this whole initiative in the ThorChain ecosystem right now about raising the bond. So without getting too much into that, the ThorChain community is trying to increase the total amount of Rune that's bonded in the network, which increases the security of the network and the scalability of the network. One thing I'm considering is if Leo should run a ThorChain node and put that as a page on Leodex where you can bond to the ThorChain node that Leo is running. And then you obviously, the way that works is if you bond to a ThorChain node, for example, by Leo, you get a share of the rewards of the node minus like some percent of the fee capture that Leo would take. So if we add a page for this, there's other services out there that are comparable, like AutoStake Thor, if you've seen it. So I'm thinking about adding, a page to Leodex where you can bond to Leo's ThorChain node if we decide to set one up. And then Leodex would take like, say, a 20% management fee of all the bonding rewards. And then you'd get 80%. And then the other 20% would buy and burn Leo because it'd be earning those rewards as Rune. And I think that's very likely something that we're going to do. And that's something that we can do on ThorChain. It's something we can also do on Maya. And Chainflip has kind of their own system, but something kind of similar with brokers. So it's something we can do on Chainflip as well. So I'm thinking about this as being another long-term thing on the Leodex roadmap, which is that you can become essentially a validator in any of these networks by joining like a collective validator that Leo operates on Leodex, and then get paid 80% of the revenue of that validator, and then the other 20% goes to buying and burning Leo. So another form of revenue potentially for Leo and Leodex in the future. You can't, Ahmad Maga, you can't put Leo into it. So the only way to do these nodes, like for example with the ThorChain node, you have to bond Rune to it. So you'll have to pick some amount of Rune and then bond it, and then it would have a lockup period like a month or 2 months or something. So we'll see what happens with that. I'm investigating right now, and I'm talking to some people in the ThorChain ecosystem about possibly managing it for us because I'd rather have someone in that ecosystem manage it. And Ahmad Maga, 10%, 20% SHIB, those are standards in ThorChain. So that's what a lot of other node operators are taking. So it's 10% or 20% of the total revenue generated by the bond or by the bonded node. So let's say that the node earns $100,000 in the course of a year. 80% of that would be, $80,000 goes to all the bond providers in the node. And the other 20% would be $20,000, which is the revenue, which would go towards buying and burning Leo. So
nice. I mean, I'm a sucker for income generation, so I would probably be an easy sell to bond my Rune.
Yeah, and I think NC Monk Masters, it's expensive to run a node, so that 20% is really just to cover the cost of running the node, and whatever's left over buys and burns Leo. So yeah, there's a reason why there's a high percentage fee on running these nodes. But yeah, like Mitch said, right now, when you think about bonding to a ThorChain node, it's like this very abstract, esoteric, thing that you have to do. You have to learn all these different options. You have to find someone you trust that in terms of who runs the node and all these other things. Whereas if we just add this page to Leodex, you obviously know Leo, Leodex, in Leo, like you're familiar with us. So the risks are something that you decide if you're comfortable with them. And then the page we add will literally be like a 2-click process of like, okay, here's what it means to be a bond provider. Here's the rules, et cetera, the fees. And then, and then you literally click a button to bond to the node, and it's that easy. And then on that page, you'll also be able to track your bond, and you'll also be able to track your rewards for being a bond provider. So it just makes it really easy. So I think this is something that we're probably going to add, not necessarily in the very short term, but probably in the long run. Right now we're just fully focused on V3. We need to get the Thorchain, Chainflip, and Rango protocols added to Leodex. Obviously I'm trying to build up the volume on Leodex and grow it. So adding those is really the lead domino for everything else. And then also all the different wallet options. So those are the key focuses right now of the team. Outside of that, that was pretty much it. I know we're at 12:05, or 1:05. Any closing thoughts?
No, I mean, obviously we had plenty of market talk, and it was good to get the updates in the Leoverse and some interesting things per the usual. So good stuff.
Sweet. Yeah, thanks, Mitch. Good to have you back. Thanks, everybody, for coming. We will see you tomorrow. Set your reminders. Tomorrow, noon Eastern, for Chain Chatter. It's cross-chain Chain Chatter. And don't forget about the contest for the podcast cover for Chain Chatter. I linked that earlier in the Threadcast. So
Get it.
But yeah, submit something. Hopefully we get a good cover for it. And then we'll start heavily promoting it, in the X arena, because I think a lot of people are hungry for more, Thorchain, Chainflip, Maya, and Rango content. So this will be a great way for us to grow Leodex in general. So yeah, keep an eye out for those announcements, and I'll see you guys at noon Eastern tomorrow.